Welcome to Bar Charts Market and Close. I'm your host, John Rowland, Bar Charts Senior Market Strategist. It's been 21 days since we've met, and the broader market indexes continue their quest for all-time highs. Now, many large bets have been made in response to this journey. The C-suite acquisitions support the bullish sentiment, yet there's a dark cloud on the horizon that threatens to rain on everyone's parade. Finally, we'll talk about the taco trade. No, not what you're thinking. Would you rather have a beef taco or a chicken taco? And all that plus your questions. And to help me out with today's program is my co-host, Mr. X, Thomas. Hello, Thomas.
Hello, John. I'm more of a chicken taco guy, John. How about you?
I am too. I don't know.
They taste good and they're healthy, right? That's what us old guys need, John.
Yeah, exactly. I feel like also, you can, the beef tacos are, you get those shells and kind of like fall apart. With the chicken tacos, you get the soft shells. You can really stuff them with stuff, right?
Absolutely. All right, John, today we've obviously got a jam-packed show, but I want to give everybody a little teaser because we've been doing this show for almost 3 years now. And this is by far the biggest announcement I think we've ever made. We're going to have a special guest on next Friday, 2:30 p.m. Central Standard Time. One of the biggest names in trading. Guys, you see him on TV all the time. If you want to guess, if you want to speculate, drop a comment on X or YouTube. Let us know who you think it's going to be. We are going to share who it actually is going to be, but you have to stick around until the very end of the show to find out. All right. So just a reminder for everybody watching directly on our website, if you want to ask a question, just click Ask a Question at the top right. You'll see it in orange. And if you're watching on YouTube, go ahead and ask those questions directly in the chat. John and I will get to as many as possible. All right, John, so let's jump in. It has been 3 weeks, John, since we last did a Market on Close show. What can you say? Stock market has done extremely well over that period. The question now, though, John, is it looks like maybe the market is running out of steam just a little bit. So the question now is, all-time highs are in sight. Is there a chance that we can get there, or do you see more of a correction consolidation period coming up?
Yeah, I think what we can do is what we continually do is we just look at the evidence of what the market is telling us, right? We don't want to make any assumptions. We're just going to look at that evidence. So let's look at that evidence. So let me do me a favor, pull my chart there, Thomas. There we go. So, the market, when we left off back here in, May 9th, we were talking about how the market was continuing to answer the bell. It was of all these technical challenges, and that when we left, we said, "Hey, we thought the market was going to test this recent high, and not only that recent high, but then it was going to go on to an area of resistance, or we call a supply zone." And so that's exactly what the market did. Now, we said once it reaches that resistance, we thought the market would have a drawback. And, I was kind of thinking maybe, we would see something, a drawback into like the 50-day moving average. But what I thought was really impressive about the market was how, we bounced off the 200-day, which is represented here by this black line. Now, it also is where the 20-day crossed over. So, we had, another bullish signal that was created as the market was going higher. So this level became a very strong level. Now, what we should have seen, though, is after the market tests this level, this bounce, it probably should have taken out this high, probably should have gotten above this whole area of resistance as represented by pink, right? But, again, some bullishness about this holding this level. This is also a partial gap fill. You know how I feel about gaps. And that gap fill tested that old high, right? So old resistance becomes new support. So let me change the perspective here. So yesterday, though, and this is kind of what you were saying is, yesterday we had this potentially earlier in the day, of what would be called a key reversal candle or an outside trading day candle. Notice that our high was made on the opening, and then we did make a low below the previous day's low. So we did trade outside the range of the previous days. That is kind of a bearish sentiment, but we did finish about halfway up in this range. So again, my candles are, I just want to remind you that my candles are open to close and not close to close. So that's why if you're following along at home, you might have a green candle where I have a red candle. And this really is kind of letting me see what the pressure or what was going on, the battles inside of a candle. So this candle was kind of a bearish in overtone. It could have been very bearish if it set it up as an outside candle. Now, again, I set up these shows and we do my analysis during the day. For most of the day, we were below yesterday's closing price. Again, that would have been a continuation of some bearishness. Plus, we made a new low. So, today's candle is kind of a wishy-washy candle. But again, we look at this in terms of the battle that went on. We did see a lot of selling pressure earlier today, and now it looks like we're setting up with a little bit of what would look like a hammer, which would be slightly bullish. But let's look at this in terms of a different perspective. And so I want to look at momentum here for a second. So let's go to MACD and RSI. So yeah, this is kind of what Thomas is saying, is that we've had this nice run, right? Had this nice positive momentum, but this could be, here's our RSI. This could be a bit of a negative divergence, right? Where we've made a high and now we're testing that high, but we're not making a higher RSI. That's, that can be a sign of, like you said, their steam is running out. Notice that our MACD, still elevated, but, kind of flat and maybe even potential bear signal crossover. So these are still have bullish overtones, right? The RSI is above 50, the MACD is in the positive, but they have some bearish sentiment to them. So let's change our perspective one more time. So let's go to a lower time frame. So I've gone down to a 30-minute time frame here. Now, what I'm going to do here is I'm going to increase my data field to extended hours. So I want to see what is happening. And again, this is the SPY. I could do this with the indexes, but if I was going to do this on the indexes, I probably would look at the futures market, the ES. But I wanted to kind of show you something that's unique to markets. And what we see here is when I go to the extended hours that are outside of like the normal exchange hours, what we see here is we see a V bottom and a V top. So what does this mean? Well, this is what, if you can remember from your geometry days back in high school, this is a sine wave, right? And this is a sign of algorithmic trading. What the algorithms have done is they first sought out where there'd be an abundance of buyers versus sellers, somewhere's down here. And then algorithms push the market higher, and then it looks where there's propensity of more sellers. And notice that in the extended hours, the high of this price movement was the top of our trading channel, or that area of resistance. Now let's put a Fibonacci on this. And again, I love Fibonacci's for a lot of reasons, but this one really kind of sets this home. If I do this, what this shows is, notice how we've went back to the 50% line. So this is telling us that in this time frame, this is a price cycle that has been completed. And now we're waiting for a catalyst to push us outside of this range. Now, this range here is somewhere between 575 on the downside and the upside just below 600. Now, we're past the earnings season, right? There's not a lot of catalysts in terms of earnings for us. So we probably need to find some other catalyst to push the market out of this range. So let's take one more perspective change, and this is what I want to do. So I want to go to a higher time frame, right? If we have, whoops, let's there we go. And let's look at this over 1 year, and I'm kind of going to do this here so we can really see this. Now, what was interesting before we got this little rally here today in the last few minutes was this was setting up to be a doji candle, which would have been a candle of indecision, but we're still in that range. You can see our Fibonacci range here on the weekly level. So this is kind of telling me, Thomas, is that in all of our time frames, we're getting this cross currents of bullish and bearish sentiments. But what it's really telling me is I think the market is going to pause here for a while. And I really can't really get bullish until we break out of the range on the upside, or in terms of the downside, break out to that range of the downside. Now let's go back to our moving average chart, and if we look at this on the daily time frame, again, that 50%, right, where we were at earlier today, below that, I think then you could set up the test, that range, that lower end of that range, and then if I was going to be bearish on the market, or I was looking for a more deeper correction in the market, well, look at how many, this convergence of our moving averages and that level of what looks like support. So again, I think this is really very positive for the market overall.
All right, John. So let's jump from kind of more short-term thinking to more long-term focused, because, John, there was a story from Bloomberg where a mystery institutional investor spent about $3 billion on call options, mostly at the money and for the June 2027 expiration period. Now, what's especially interesting, John, is these are mostly mega cap tech stock bets. A few examples: Amazon, Salesforce, ARM. Now, John, I personally view this as mega bullish because not only is this for the next 2 years, but if you're betting on big tech, sorry guys, I was thinking about the taco trade. If you're betting on big tech there, John, it feels like you probably are of the opinion that the economy is going to continue chugging along. So what do you make of this story?
Yeah, I think if we break this trade down, when you brought this trade to me, I was like, oh, I want to know what the details of this trade is. And I know that this at first take looks like a huge bet, right? A mega bet. But I think when we break this trade down, what we're going to see that this is really just about a savvy and very rich investor who's taking advantage of the leverage of options. So let's go back to my chart here. Do me a favor. Will you set that up for me, buddy? There we go. So you said it was the June 27th. So, I was thinking, well, okay, let's see if we can find some evidence of this trade activity. So Microsoft, obviously one of the large mega caps, technology stocks. And, I don't remember the date that you said, but, I'm looking here in terms of open interest, right? And, we only see one that has a large amount of open here. It's about 1,300. And if I open up the history on that, right, that happened around May 6th. Timing wise, is that about right when that happened, right, where the story came out?
So actually the story, I think, came out maybe about 2 weeks ago. So, perhaps, because the story is not real time, John. So perhaps it was.
Right. So here we can see that there's 1,300 volume, and that the next day the open interest went up by 1,300. So that's a confirmation that these are new orders. Now let's look at this. And here, I'm going to read my notes here. Because I want to get this right. So first of all, understand about leaps that there's some rules you got to kind of understand about pricing of options. First of all, in leaps, the deltas tend to be a little bit muted. Another volatility is a little bit muted. Let's go to, well, I'll show you that in a second. But the delta for this particular trade, it is around 61, 62, 63, something like that. And even with the price appreciation in Microsoft, that delta hasn't changed much. So leaps, you get kind of a steadiness to the market. The other thing is that higher interest rates also affect calls. So higher interest rates will actually appreciate the calls. Dividends actually take away from the price of calls or decrease the price of calls. But we're talking about these tech stocks, and they don't really have a lot of dividend payout. So that's something you need to understand about leaps. Okay, so let's break this trade down. So 1,300 shares. It looks like they paid somewhere around, here's the high, here's the low. Let's just say $79. So 1,300 options at $7,900 or $7,900 because every one option is 100 shares. So that would be $7,900. So that would be about a $10,200,000 bet. Now, here's the leverage of options. On that day, on May 6th, Microsoft is trading $440. So that would mean that if I put $10 million into Microsoft, that would allow me to buy about 23,000 shares. But I'm buying 1,300 options times 100 shares. That means that I'm going to take control of 130,000 shares. But if I bought 130,000 shares at $440, that would cost me $57 million. So what this trader is doing, the savviness of this trader is that they're getting in this trade at the fifth of the cost, but they're taking control of 4 times amount of shares in Microsoft. So let's look at this another way. The trade at $440, and they're paying $79. That means that this trader thinks that Microsoft is going to go up to $519 between now and June 27. Well, Thomas, that's only about an 18% appreciation in a price. That is not, I would consider, very bullish. I just think that is kind of a conservative estimate of where Microsoft could be 2 years from now. Now, let's think about who could afford a $3 billion trade. Well, somebody would have to have a large amount of money. Let's pretend that this individual has $200 billion to trade with. And I don't think that is an unreasonable assumption in terms of some of these large individual traders. Look at Warren Buffett. He probably has $500 million that he could spend. So if I spent $3 billion on these options and I have a $200 billion account, well, I'm only risking 1.5% of my portfolio. So to me, Thomas, I think this is not a big bet. I just think that it's big because the numbers are big. I think this is really just a very savvy investor who's taking modest risk for a good reward, and he's using good asset allocation discipline.
Yeah, I think you might be right, John. Of course, the timing is interesting too, right? Because if you go back a month, right, go back to early April, you could have easily had jumped into these positions for a much lower cost than you would have done in early May. So the fact that maybe a savvy institutional investor is now saying, well, maybe things have changed, John. So I'm going to just at the very least sort of hedge my portfolio with these because I'm not so sure anymore.
Well, I think it's a valid point, right? Because back in April, there was uncertainty. So maybe this trader feels that he has a lot more clarity about where he thinks the market is going to go, right, next year and the following year, right? So that makes a lot more sense, doesn't it? Right? It's really, it's not always trying to buy the bottom, right? Because the market could still go lower. It's about finding those positive confirmations. And that's probably what is going on here. That's would be my guess.
All right, John. So let's, switch gears a little bit. And, I personally, John, I'm a little tired of this topic because it just feels like a never ending topic that just continues to go on and on and on. And that is U.S. Treasury yields. So the 10-year Treasury yield, John, just recently hit 4.5%. And the chatter, at least on social media, is that 4.5 is sort of that so-called breaking point where you really see pressure hit risk on assets such as equities when the 10-year is 4.5. So, John, what is your take on Treasury yields right now? Do you envision this continuing to go higher, or are we just going to be in this never-ending period of oscillation between 4 and 5%?
Well, again, this is the chart of the 10-year note. That's what's the black line here. The brown line represents a 13 EMA. In other words, what we're looking at is an average of what the 10-year note has been over the past quarter. But to me, I feel like the 10-year note is really that interest rates are normalizing in terms of a big historical presence. So yeah, I think you're right. It's kind of oscillating back and forth here. Now, I know that when we did our pre-discussion, I was saying to you that I felt that this was going to be a headwind for equities markets, and that above 4.5%, which is kind of that chatter you're saying that this would affect the equities markets. And so I think the things that we have to think about is that when we get higher rates, right, that actually attracts conservative investors into capital reallocation. In other words, going into fixed assets. Higher rates also discount potential earnings, right? Especially for growth stocks. Also, higher rates are a headwind when the government, Treasury issuances, they have to pay a higher rate. That kind of crowds out corporate and consumer debt, right? The cost of debt is a lot more expensive for them. So that's, a deterrent to the economy as well. Now, your point has been we've been here before, right?
Exactly. We've been here before. And in fact, I think the last time we were here, we saw the equity market sort of rally, I believe.
Yeah. So that's what we're kind of seeing is, right? It's as rates are rising, that's when the equity market, goes down, is when they peak. That's when the market rallies. So we do see that. I give you that. But what's different, and I hate to say, and you know how I hate to say, what's different this time
Oh boy, John.
is that, right? What we have is that, back in 2023, we were the only game in town. We had the higher rates, right? If you look at countries like Japan, their long-term bond was probably around 0.5%. Well, now their long-term bond is around 3.5%. So that's a huge move. And so what's happening is that capital is being repatriated back to Japan. At the same time, our debt has gotten a lot larger. Now, you can alleviate the debt problem by lower inflation and economic growth, which is what we saw back in 2023. That was right, that American exceptionalism that attracted foreign capital. This time around, it's not that, right? What we've seen is that our debt is a lot higher, but the markets around the world, first of all, their interest rates are much higher. And that many of these countries around the world, their markets, their capital markets are outperforming the U.S. So it's a lot different this time. So to me, I think this is a headwind that we have to be very, very conscious of. Now, I'm not predicting the end of the world. I'm just saying that this feels like this is a part of a process of, capital just reallocating around different global markets. But it's something I'm going to be keeping my eye on. To me, I think above 5% on the 10-year note, then I think we got to start to think about things worrying about.
All right, John. So, we've had this long running theme of C-suite insider buying. We've highlighted multiple times over the past few months, multiple companies, and the trend continues. So two ones that really caught my attention, John. Philip Guido, Chief Commercial Officer for AMD, recently bought $1 million worth of shares. That is the largest AMD insider buy since November 2006. And then United Health, much different company, much different circumstance than AMD right now, saw 30 million worth of insider buying from their CEO and CFO. Now, John, I have my thoughts on which of these buys I like better, but I'm curious what your take is on both of these and which one you place a higher confidence level in.
Well, I think if we look at the AMD trade, right? To me, I feel like this is the safer of the two bets. In other words, if we look at what's going on with AMD over the last 3 years, it's been a kind of range bound. Now we give you it's kind of this upward sloping channel, and maybe we're now at the bottom end of that channel. So there is probably a better probability that it will probably revert back to the mean. But if we look at the peak from 2022 and where we are now, we're down about 33%. So what's the potential for that market? Now, if you look at UNH, we do the same analysis, right? Since the peak in 2022, we're down 45%. So I think UNH has a greater potential of reward, but this trade kind of reminds me of two stories. One is that back in the 2029 crash, the then president of the New York Stock Exchange came on the floor and bought at some very key stocks posts, and that stopped the crash, temporarily stopped the crash. But 6 months later, the market was lower, and in the next 3 years, we were in the Great Depression. But on a personal experiences, this kind of reminds me of Enron. Enron was trading around $75, and it fell down to about $50. Again, that $25 on 30%. The chairman and CEO of the Enron at that time, Lay and Skillman, came on and said, "Oh, there's nothing wrong with our company, right? Oh, this is all hogwash, and you should be buying the Enron stock." They actually encouraged all the Enron employees to put their money into Enron stock. Now, you made a valid point in our production meeting, is that the UNH guys are saying, "Well, we haven't heard any of this bad news about the DOJ, right?"
Yeah, exactly. So they came out and they said, well, we haven't been notified. The problem, John, is the Department of Justice doesn't have to notify subjects of their investigations. In fact, it would be kind of dumb if they called people up, right, and said, "Hey, yeah, just to let you guys
by the
know,
way,
you're being investigated."
Right. I mean, they probably would hide the evidence, right? Exactly. So I think it's a little different. I think the fact that it's a huge amount of money, right, that maybe gives it a little bit more onus. But to me, I think this is a more risky trade, because if they are convicted, or there is truth to the stories of what the Wall Street Journal was saying, is that they would get a death sentence from the government. In other words, they can't participate in any government insurance programs for 5 years. And I think that would be very detrimental to this company. But let's say that all things being equal, and it's not true, I think this one has a much greater reward. I just think it has a lot of risk.
Yeah, I think, as I said to you, John, this one is a bit too risky for me. To be honest, John, I don't even just like the company. I don't want it in my portfolio. It's like I'm just not. I wouldn't be proud to hold it. But beyond that, I just feel like AMD, no going concern risk at all. In fact, if the economy continues to chug along, AI takes off, AMD is probably going to be a long-term beneficiary of that. United Health, I mean, it's going to be a zero or a hero, right? I mean, it's just way too risky, and I don't want to wake up one morning, John, and see a big fat zero in my portfolio.
Yeah, I agree. I agree with you. And then on the AMD side is like, even if the story of AMD, which has made it trade sideways, the AI story is still a very powerful story, and maybe there are some crumbs or leftovers from NVIDIA that AMD can pick up, right?
Absolutely.
All
right, John. So on Monday, obviously, Memorial Day, I had a cookout with my family, John. I'm sure many of our viewers did as well. We grilled some chicken, some sausages, some burgers, and the timing is perfect because Wednesday was National Hamburger Day. Unfortunately, John, it's not a happy National Hamburger Day because, and I really hate to bring this chart up, it's just so painful for many people. Ground beef just hit a new all-time high. John, this is problematic. I mean, I eat burgers multiple times a week. It's if not pizza, burgers are my favorite food. So this is like really painful for me. But let's kind of switch our mindsets, John, and not think about it from a consumer's perspective, but perhaps an investor's perspective. And are there any companies out there, John, that could potentially be a beneficiary of this surge in ground beef price?
Yeah, I think there is. And the one that I think that comes to mind to me is Tyson's Foods. So, about a couple weeks ago, we did a webinar on value trading. And we put together a screener that looked at different metrics based on uh, like Warren Buffett, John Bogle, Benjamin Graham. And what was interesting, and we looked at things like dividends and book to price to book and free cash flow and earnings growth and a lot of fundamental analysis. And what was interesting, that screener, that Tyson Foods hit the screener. Now, what's interesting is if we go down here to news stories, our own staff are contributing staff. We go back to May 7th, and this is 2 days after their earnings report. They basically, what the earnings said was that the CEO said that there's seen the most challenging part of their business in terms of cattle, beef, right? So Tyson's does beef, they do chickens, they do pork, they also do some pre-packaging stuff, but they still beat expectations, right? And they still have a positive cash flow, and their earnings is lower than their competitors or those that are in that segment. So a lot of positives in the fundamentals. And you think about it, if you go to the grocery store, you just said it, right? Ground beef is getting crazy expensive. Well, the consumer has a choice, right? And they can still go to chicken. Now, Tyson Foods probably drives more of their income through chicken, and they were able to maintain their positive cash flow and their earnings based on this diversification of their portfolio. So that's the fundamental argument. Let's look at the technical argument. And so one of the tools that I like to look at that I use is called the EMAC buy signal. And you can go in there and look at it. And I just did a webinar on that one just a few weeks ago as well. And I'm going to go to the chart, back to the chart here, Tyson's. And about a couple of weeks ago, not too long ago, maybe a week ago or so, let me change this to MACD. We got a buy signal, right? A MACD crossover buy signal. So let's look at this from a technical aspect. Let's go to a weekly chart first, right? We've been range bounds. We're on the lower end of a range, right? Something similar we just saw with ADM. Let's go back to the daily. We got a MACD crossover, right? That's a positive sign. Now, I like to see a MACD crossover, and then I wait for a secondary confirmation. One of the confirmations I like to see is the MACD to get out of the negative below the zero line, get above it. That would be a good confirmation to me. The other would be the RSI. I like to see the RSI at or above 50. Now, the RSI, though, is interesting, is we made this low. We made this low on the RSI here, and then we made this secondary low, but we had an RSI that was actually higher. This is called positive diversion. This is another bullish signal. So I think there's two technical things that are very bullish for this. Again, one other piece of evidence is volume. And I love to look at volume. You know how I feel about volume, that validates price. But when I'm looking at one of these MACD buy signals, I like to see a spike in volume prior to the signal. And in this case, maybe this was a capitulation. In other words, this was a reaction to the earnings report. Now, we did see a spike in volume here as the market started to recover. Now, since then, prices have dropped back. Now, if stock was really going to go down, we probably would have seen, again, a spike in volume on the downside. But we didn't. What we're seeing is volume has actually dropped off. And so this is actually a bullish indication that the selling sentiment is drying up. maybe you've heard the adage, don't sell a dull market, right? So to me, all this is adding up to a potential trade. Now, from a swing trade perspective, I'm probably going to wait for some other confirmational information. In other words, I want to see a positive MACD. I want to see the RSI above 50. I want to take out one of this high. Maybe I want to see a bump in volume, positive volume, and positive price action. But for a long-term investor, I think this is a low-risk trade. Again, this is just my philosophy of how I look at market. This is not a recommendation. Here's this company that's paying 3.5 dividend. It's one of the largest protein providers in the United States. It should be buffered by any kind of tax implication. And because they're diversified in the protein sector, they should be able to benefit from it. And if hamburger prices do come down, well, that headwind, dissipates. And I certainly think that this is a stock that could appreciate.
All right, John, great job there. Hey, folks, if you're watching on X, go ahead and, give us a like, leave a comment, share it if you want, share it to your friends. Same thing on YouTube, guys. We really appreciate all the comments and the positive feedback that we get. Let us know what you like about the show, and we can do more of that going forward. So, John, I mentioned that we had a special announcement, guys. You got to stick around until the end of Q&A, and then we will reveal that. It'll be a nice send off into the weekend. All right, John, you ready for some questions?
Yeah.
All right, let's see what we got. Oh, here's a good one, John. I'm actually wondering the same thing. I got this stupid stock in my portfolio called Apple, John. It's just an absolute weight in my portfolio right now, holding everything else back. What's going on with this one?
Again, this is one of those Mag 7s that I've always had kind of my doubt on this one, only because I feel like, every time we get to a new iPhone cycle, it seems like it doesn't have that enthusiasm we saw for many years. They're having some issues with, their supply chain. You got all this threats from the current administration. So I just think there's a lot of uncertainty to it. So I know there's some kind of convention that's coming up soon that they're going to show some new products or some new innovation. So, I think the market needs to see that. Certainly AI is probably going to be one of the apps they're going to be putting on the Apple phone. So I think this is just a reevaluation. Again, I'd have to look at what its PE ratios, but I'm going to guess, and let's look at that real quickly. And I can only see trailing right now, but it's probably a little bit, it's gotten a lot cheaper from where it was. So, maybe it needs to come down just a little bit more, but it does feel like, Thomas, here, that it's least stabilizing, right? And you can kind of look at this level, this triangular range. If you're going to buy it, you kind of have a risk here around 190. And again, your upside potential could be as much as 220. I just think this is kind of one of those, it went from a growth stock to kind of just, this is a long-term stock, right? It went from growth to kind of just a phone company, right? Or a phone.
One thing I hear a lot with Apple, John, and I'm a big Apple user. I mean, I switched to the iPhone when the iPhone 12 came out. I was an Android guy. I switched to the iPhone. I love the product. I have a MacBook. I've got an iPad.
But yeah, I think we all do, right? I mean,
but I haven't upgraded, John, since the 12. And the reason I haven't upgraded is I keep waiting for this sort of game changer update where I'm gonna be compelled to go out, race to the Apple store and buy it, and it's just not coming. And I'm kind of wondering, will that ever happen? Will there ever be a game changer update release?
But then again, you think about American exceptionalism, right? I mean, this is one product that is used. That's American product that is used around the world. I mean, if anything, I want to be bullish on this company, right? I want to be enthusiastic because it really is a reflection of American in um, innovation, right? I think that's your point, right?
Yeah, I think it's the premier American brand across the world. Yeah,
Yeah,
yeah.
exactly.
So
So
yes, I'm rooting for Apple. I want it to succeed. I want it to do well.
of course, we're all rooting for it, right? It's a great American story, right? But again, every time we get one of these new iterations, it's kind of, oh, well, oh, thanks for another lens, right? Or another camera, or, oh, I can have a different uh, background color, right? Ooh, oh, thanks.
All
So
right, John, any thoughts on LNG energy plays?
I still believe in the long term bullishness of LNG, U.S. dominance in that space. Um, European inventories are still below their 5-year average, so that's bullish for us. The problem, what is going on, is that we're not sending any LNG to China. There's kind of this shift that's going around globally. China is sourcing from other places. That kind of is bearish for us. Um, but yeah, I still am very bullish on the LNG play. I think you could be bullish for the LNG play for another 2 years, out to about 2027, and then we'll see what happens when a lot of new supply comes on, global supply, and see who will be the dominant player. The problem is that we do have an advantage here in the U.S. in terms of a cost, but the cost of finding the LNG is continuing to, even with innovations in drilling, still continue to rise.
So we got a good question, John. We a new Premier user says he goes to our website and he sees all these different option strategies, but he's not sure which one he should go with. He's not really sure where to start. I feel like there's two places that you can go. One is we have this options learning center, which is directly under the options tab. If you go all the way to the bottom, John, options learning center. Yeah. So if you go here, guys, you'll see a full and complete explanation of what these different strategies are. And then you'll also notice at the bottom, there's a watch on YouTube tab. So we've created all these YouTube videos, instructional videos, John, where people can go and get a more in-depth explanation of what these strategies are, practical uses, and all the risks and potential rewards that you could have. So that's number one. Number two is we've done a ton of YouTube videos, guys. You can only find them a lot of cases on our YouTube channel. So if you just go to Bar Charts YouTube, search for what you're interested in, you'll get different videos on different strategies that you want to take a look at.
Yeah, I think that if you're just getting into the options, I think a couple of very easy strategies: the covered call, that is where you buy the stock or you already own the stock, and then you sell a call that's out of the money, and it's an income strategy. I think that's a very easy one. Naked puts is another one. It's kind of a way to discount way you're into the market. You sell a put, and if the market comes down to you only sell puts on companies that you're willing to buy. And so if that you get exercise, you actually get to buy that company at a discount. So I think those two ones are very easy to, and certainly ones that you can dip your toe in to start learning how to trade options.
So, John, this year, obviously there's been a bit of turmoil in the U.S., other countries around the world, not sure if they can sort of trust us or if they want to invest with us. So that means we've seen a bit of rotation into other parts of the world, Asia, Europe. So the question is for you, do you have any thoughts on Europe? Maybe 6 months to a year, would you be looking to deploy any capital out that way?
I feel like there are probably going to be opportunities in other markets, but if you look at, here's the world indexes, and actually I set this up because of the Japan one. I still like Japan for some reason. I don't know. Maybe I'm, um, you know, like Harry Carey or whatever. What's the word I'm trying to think of? But look at the 3 months performance here, and we're already seeing this, right? So Jakarta, your WIG is Poland, Brazil. You got Mexico, Budapest, right? The Spanish is up there. Here's the DAX. I'm being concerned about Germany. Germany unemployment reached like a 2-decade high. So I think countries like South America, where they have a lot of natural resources. Argentina's got some problems with, still have maybe some problems with, hyperinflation. Brazil, though, definitely looks like a growth story. Again, I think as capital repatriates into Japan, I think, money is going to chase into their capital market. So, I mean, I think those would be the two that I would be looking at. But you already see that many of the European capital markets have already appreciated significantly. If we do this based on a year to date, right? Here's Poland, Russia, Spain, Budapest, Austrian, right? Germany, right? So, that's where I would be looking.
John, we got a question if you were using Fibonacci's on the interactive charts earlier because they couldn't find it on their chart.
Okay, so let's go to a chart. And over here on the tools side, if you don't see your tools, there's a little, would be in a little chevron here. It's probably pointed the other way. You need to open that up, or you can find tools up in here. Right there, you can see the second symbol down. You can find there's your retracement, there's your extensions, and all those exotic ones.
John, question was, we covered Bitcoin last time. We said it could hit an all-time high. It did hit an all-time high. Now that it did, do you have any thoughts on what's next?
Again, I think Bitcoin is still a risk asset, and we talk about this relationship that Bitcoin has with the NASDAQ. And so as long as the NASDAQ continues, we did, let's see, do we still have it up here? Yeah, we do. So look, right? I mean, the correlation is, almost like 90% here. So until Bitcoin separates itself, right, from this, I still think it's really just kind of a tech play. I know that's kind of weird to say, but that's kind of my feeling on Bitcoin. So whatever the tech market's going to do, I think Bitcoin's going to do until it proves itself otherwise.
Now, it was a little interesting that a week or so ago, maybe 2 weeks, John, you can clearly see Bitcoin showing strength while tech was dropping, and it did so into that new all-time high. And I just think there was a lot of pressure behind that final move because it was kind of a third attempt at hitting that new all-time high, which it did.
Yeah, that's our little pink bar where we already had discovered a level of resistance. So, I mean, on a technical basis, right, you got a breakout, fake out, right? That's not bullish, right? But that's not really that bad. So a lot of times the market needs to clear the way. Remember my snowplow analogy, the first pass needs to clear the resistance, regather energy, and then the next time up, you get that expansive move.
So, John, financial markets, investing, trading, it's very serious business. But it's Friday. The weekend is coming up. So maybe I thought we could jump into the weekend with a little humor. So I did this meme earlier this week, John. The evolution of trading.
Yeah.
John, you and I are old enough to remember a time when we studied fundamentals and we studied charts and technicals, and we tried to come up together with the best trading idea, putting the pieces of the puzzle together. But now, John, all you really have to do is pay attention to what Donald Trump says and all the news on social media platforms, primarily X. And that's all you need, John. That is all you need to succeed in the financial market.
I think if anything, this is a case for you why you should be following us on X, because you are always on top of all of this craziness, right?
Absolutely. Absolutely. Make sure to follow us on X, guys.
Yeah.
Put a lot of good information out there.
All right. What's our special announcement, Tom? Because it is running out.
I'm excited about this, John. So
I'm really excited about this.
We got a lot of guesses. We got Jim Cramer. We got Donald Trump. We got a Tim Cook prediction. It's not any of those guys, but it's a name you've definitely heard. It is the one, the only Mr. Tom Lee from Fundstrat, John. He is joining us next Friday. He's going to talk about his V-shaped recovery prediction. He's going to share his outlook on the market, maybe give a few price predictions. So I'm excited about this one, John. I hope you are too.
Oh, I look for opportunities to pick the minds of great traders, and I am just absolutely giddy about this opportunity to have a discussion with Mr. Lee. So yeah, I'm really excited about this.
So again, guys, if you want to watch this live, Tom is going to be with us for the first 20 minutes of next week's show. So that'll be between 2:30 and 2:50 p.m. Central Standard Time. If you guys have other obligations, don't worry. It's going to be recorded as always. It'll be showed to our X account, our YouTube account, our website. So you'll be able to watch a recording if you can't come live.
All right, Thomas, great job. Great to be back. And thanks for all you do for me. I appreciate all your work. Folks out there, I appreciate all the questions, Thomas, and I appreciate, the time you spent with us. I hope you guys get something out of our shows. Until next time, the best of health, manage your risk, and the good of all trading.